Well, your resume is impressive, but what would you say is your greatest weakness?
I daydream constantly about living by the water, the warm sun, in a dynamic city with amazing food and craft breweries, weekend events.
Okay.
With tons of jobs, less stress, awesomely affordable neighborhoods.
It sounds glorious.
Stop daydreaming and get to Tampa Bay for high-wage jobs in finance, tech, and more, all under the warm Florida sun. Find Florida's most bright opportunities at makeitampabay.com.
Welcome to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics, a production of America's Talking Network. You can listen to all of our podcasts at americastalking.com. To support podcasts such as this one, please make a tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Friday, June 14th. And join me as always, Dr. Orphe Divounguy, PhD economist. Dr. O, good day to you, sir. How are you today?
I'm doing well. How are you?
Good. I've really enjoyed the column that you've written for the Center Square Newswire service, which is also a project of Franklin News Foundation, and the way that you distill the economic week to come. We are taping this on Friday, June 14th, and there may be some alterations between now and when your column is released. But what are you looking at for the week ahead?
Oh, yeah. We had an absolutely amazing week with the data coming in. We had CPI coming in right before the Fed speech, the Fed chair speech. CPI came in flat. We were expecting it to advance a little bit, right? We knew disinflation would continue, but we expected it to advance a little bit. Came in flat. Core CPI easing slightly more than expected. Now inflation is easing again. And coming down even faster than I think the Fed had expected. Roughly at the same pace that the Fed had expected back in March, and then faster than the Fed expected in the June dot plot, right? I think after Q1 of really stronger than expected economic activity and inflation, the FOMC kind of revised their expectations up for everything, for inflation, for the strength of the U.S. economy. And look, you look at the June dot plot, they now expect core PCE to be at 2.8% for the year at the end of the year. It's already there. Core PCE is already 2.8% year over year. So basically, they don't expect more disinflation for the rest of the year, or they're playing it safe, right? But all of the data that's coming in right now, you look at PPI, the producer price index, we got it on Thursday, actually fell on the month, minus 0.2%. So we're basically looking at a faster disinflation than expected. Now, the people tend to travel and spending you get an uptick in spending during the summer. So we'll see. But ultimately, I think we're probably going to get that one rate cut, at least one rate cut. Maybe not before the election, maybe in December of this year. So really interesting week.
Yeah, let's talk about what's to come. I mean, that wasn't, and I think that should inform the information.
Totally. We're going to get retail sales next week. Retail sales, I think, they were flat last month. Why were they flat? Well, guess what? If you look at the consumer, when you look at consumer spending, it's basically just increasing at the same pace as income. And that's really supported by the labor market. It tells me consumers are kind of like running out of room. And so I don't expect a big increase in retail sales coming at this month, right? So likely to be flat again or slightly positive. Going, in next week's report for May. We're also going to have a number of Fed officials speaking next week, which is likely going to cause the market to swing wildly. But ultimately, I expect yields to end the week slightly lower than they started. So I think that's going to be good for the markets in general. So we're going to have Treasury yields easing a little bit next week, easing further next week. And then we're probably going to have the stock market rallying because two things. First, you still have a strong labor market that supports the consumer, even if the consumer is cooling off. And basically, you're going to have lower Treasury yields, and lower interest rates are good for business. So that's probably my thoughts on what's to come. In terms of Fed officials speaking, you're gonna have Tom Barkin. Tom Barkin's somewhat of a moderate, so he's not somewhat of a centrist. So you can't expect too much from him, except the fact that he's probably going to repeat what Chair Jay Powell said at his press conference this week. You're going to have Lori Logan. Lori Logan is the Dallas Fed president. And Lori Logan is going to be slightly more hawkish in her speech and basically saying that after she saw this new data, she's probably going to say, yeah, this is good news, but we're probably going to need a couple more months like that before we can start talking about a rate cut. You're going to have Austin Goolsbee, Chicago Fed president, who's probably going to be more dovish. And, he's been talking about cutting interest rates. And so that's going to, market's going to hang on to that. And then in terms of data, we'll have housing starts. We know that builders have been pulling back, right? Housing starts had increased only slightly in April, but permits had decreased in April. And permits tend to lead starts. So if permits are decreasing, then it's likely that we're going to have a decrease in starts. I think starts are probably going to be flat, maybe slightly up, because we saw a big decrease in mortgage rates in the second half of May. And that big decrease in mortgage rates means foot traffic probably resumed. Builders saw a little bit more activity on their sites. Builder confidence also due next week. I think builder confidence was already dropping. It's likely to increase slightly in the month of June because of what I mentioned. Mortgage rates has started easing at the end of May and have been easing since. So that kind of concludes existing home sales. Sorry, one more. Existing home sales coming out next week. Existing home sales fell in April. I think they're probably going to be, they might be down again in May because we had, mortgage rates remained very elevated in May, only started easing towards the end of May. So we're probably going to see existing home sales decrease again in May. If you look at Zillow data, inventory is now up 22%, I think, from a year ago. So, with the increase in supply, the fact the sales are not keeping up with the increase in supply, more homes are accumulating on the market, price growth is easing. And I think Zillow now forecasts price growth to even decline in the coming year. So sales probably down slightly again in May and may actually stay down slightly relative to last year, which went against my forecast at the start of this year. I thought sales would rebound given the increase in supply. Sales haven't. It could be that they were delayed because with mortgage rates easing going into the summer months, we may have a big change in kind of what the typical seasonality in the housing market looks like, right? Usually people shop in the spring, but that's been moved back more and more in the past couple of years due to higher mortgage rates in the spring. And so maybe we're going to get more activity in June and July than we typically do because mortgage rates are easing.
Well, I appreciate your thoughts as always, Dr. O. Make sure that you take a look at Dr. Orphe Divoungui's column each Monday at thecentersquare.com. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics at americastalking.com.
Well, your resume is impressive, but what would you say is your greatest weakness?
I daydream constantly about living by the water. The warm sun in a dynamic city with amazing food and craft breweries, weekend events.
Okay.
With tons of jobs, less stress, awesomely affordable neighborhoods.
It sounds glorious.
Stop daydreaming and get to Tampa Bay for high-wage jobs in finance, tech, and more, all under the warm Florida sun. Find Florida's most bright opportunities at makeitTampaBay.com.